Yeah, thanks so much. Let's see here. Who wants to go next?
I'm up for going next if that's okay.
That sounds great, Tom. Go right ahead.
Cool. Cool. Let me just turn my camera on. Hey everybody. Yeah, I just want to say I'm a huge fan of Anchor as well, and the whole Terra UST relationship there. It's really like it's a great sort of first protocol to launch on your layer one to have an algorithmic stable coin and yeah, kind of do this great yield that then pumps, the mechanics of UST that ends up pumping the Luna price. So it's kind of a flywheel there. Let me share my screen.
By the way,
So
as you go to share that, just one more note on that. We've called this algorithmic, which I have a little PTSD, I think, from algorithmic stablecoins on Ethereum. To clarify, if I deposit, let's say Luna, which is the governance token of behind Terra, if I deposit that into Anchor, that is we're burning $1 of Luna to create a essentially a UST, $1 of UST. So just if anyone is like, oh no, is this like Iron Finance or empty set dollar? No offense to them, just those have been insane experiments that I would say have not gone exactly well so far. But anyways, do your own research, check it out. It's an interesting model. So, anyways, Tom, go right
yeah.
ahead.
Yeah, cool. So just a brief introduction. My name is Tom Kearney. I run a VC firm that is focused on early stage crypto projects. It's called Ecco Capital. And yeah, so I've chosen this project, Sommelier Finance, to do some research on. And yeah, I want to keep this brief. I know we're pretty far into this meeting. So yeah, just kind of broke this down into four parts. The context, or I guess sort of like the market in which this exists, the product and roadmap, the team background of the team, and then kind of how this might fit into Aladdin DAO. So this is sort of like more of a, I guess, like a VC approach of looking at a product. Yeah, so kind of the background here, Uniswap V3 launched in May this year, I believe, which was a really big improvement on the V2 design. It's a lot more capital efficient, lower slippage, et cetera. It's sort of a better deal for both traders and LPs. You can earn a lot higher fees relative to the capital you put in, but it's more complicated, requires more work. So before you had this really simple interface where you just put, native assets in and then you can just sort of forget about them. And now you have to really actively manage your position. There's a lot more to think about as far as like preferences. But the fees can be a lot higher. Yeah, kind of the big thing you have to think about is the price range you want to supply liquidity at, and how you sort of see the market in the assets you're supplying. So from a retail LP perspective, this is sort of a lot to think about, a lot of new things to think about. And especially on Ethereum, if you have a small amount of capital and you want to do liquidity providing, you have to think about changing your position on chain a lot. So depending on how much capital you have and what gas fees are, et cetera, it could be really prohibitive to, move your assets in around in a way that's advantageous. So yeah, that's kind of the background on which Sommelier is built. So it is a application specific blockchain. So it's a Cosmos SDK chain, which is being used as like a coordination mechanism for supplying liquidity right now only on Uniswap, but sort of the sky's the limit in terms of what you could imagine this being used for. So it's sort of built initially, yeah, like I was saying, around this concentrated liquidity providing experience. There's this really sort of simple user interface where they'll kind of give you reasonable parameters for doing concentrated liquidity based on your market sentiment towards, in this case, ETH. This allows for a really simple batching of transactions. So one thing I didn't kind of understand until I was like reading about this protocol is that there's sort of like a flat fee like per ETH transaction, and that the like instructions have like much smaller sort of gas fee on top of that. So it's actually kind of trivial if you just have a bunch of people that want to run instructions that you just batch it together, and you can save quite a lot on gas fees. They claim up to 90% just based on that. So I think on Uniswap right now, there's the optimism is live. Like there's fee compression based on that, but it's in alpha right now, and so I'm not sure how many people are using that. So this is a pretty immediately interesting thing. There is just saving quite a bit on fees. So yeah, it's sort of like it in some ways has this sort of L2 experience, but just geared specifically towards Uniswap v3. Right now, there's sort of this like really user-friendly app with like limited sort of knobs to push around. But I think that on the back end, there is quite a lot exposed via their protocol. So yeah, their roadmap also includes doing like rebalancing and like lots of other interesting features related to specifically concentrated leverage concentrated liquidity providing. So yeah, I guess sort of looking at pros and cons here. The way I'm looking at this protocol, you have to ask yourself if this new AMM model is going to be like, long-term viable, and are other AMMs going to move to this same sort of style? And if that's the case, then this could be like a pretty essential piece of tooling for that experience, especially, for retail. But you also have to ask, okay, if that is the case, does market making, in these AMMs move towards a more specialized group of people that can maybe build this kind of tooling themselves? Does retail just kind of get pushed out of this world more and more in general? And if that's the case, is this like a really useful thing to have, this more user-friendly product? So those are some things I'm kind of thinking about. Yeah, so the team, the big thing about the team is that there are 9 co-founders, which is interesting. I think there's some pros and cons to that. I think like on the one hand, I kind of love, it's a very like decentralized attitude of like everyone owns this thing, which is cool. But you have to ask yourself if, there's going to be too many cooks in the kitchen, too many people with strong opinions about where this thing should go. Another pro, though, I think, is that I'm pretty sure, it's a really impressive group of people that's building it. And I'm pretty sure that there were no VCs involved in this. So there's not some like large portion of the protocol tokens that are just, going to VCs. So that sort of makes the farming experience a lot more valuable, I think, if it's the only way you can get some of these tokens is through providing liquidity. So yeah, and then just some specifics. This guy, Zaki Manian, is like a sort of known as being like a big Uniswap LP early and sort of like really deep in that community. you have some Cosmos core devs, Ethermint core devs, and then this guy Justin Kilpatrick is like a Ethereum bridge dev. So they have like a very impressive sort of like technical team. So it feels like, yeah, great development team. The big thing to consider here is that there are 9 of them. Yeah, and then just specific to AladdinDAO, sort of like where my mind is at right now is around like these 2 questions I've been having around, how custodial would AladdinDAO be comfortable being? I mean, it was sort of interesting hearing about some of these degen farms that like maybe there's like a really specific period in which they've got great yield, but there's lots of considerations, would we be comfortable running a strategy in which someone else is making decisions with DAO member capital around when to get in and out of pools, etc. In this case, like running one of the running like a really good concentrated liquidity strategy would be like a complicated thing. So if we were to like incorporate this protocol, would we want to have a pool in which someone else were sort of running that strategy? Or would we want to just, show this same tooling to AladdinDAO members? So that's something. I know there's also, I think Alex Pack in the intro meeting said that, it wouldn't be a custodial service. So, but yeah, the other thing that I'm thinking a lot about right now is just sort of like the possibility of doing like DAO-specific deals. So, I mean, like, again, I'm talking to a lot of like early teams and everybody's thinking about how to get TVL. So, the most obvious thing to me here is like if the DAO could say, have some guarantee about providing TVL in exchange for like, potentially like more governance tokens for a specific app given to DAO members. So yeah, I'm kind of interested to hear what other people's perspectives on this type of thing are. Another thing just, was interesting hearing Hassan's comment about, like a lot of the great stuff or a lot of the great yields being on Solana. One other thing I was sort of thinking about is trying to find like, more close partnerships with bridge operators. And DeFi Dad also mentioned that, that's like a major concern. Definitely share that concern. And I think if we end up having a lot of capital that we want to deploy to say like Anchor or to Solana DeFi, sort of building a relationship between the DAO and various like bridge operators is something that is pretty interesting to me. So yeah, I'll just kind of leave it there, I guess, and maybe we could, I'm not sure if people have immediate reactions to either of those 2 things, but yeah.
Thanks so much, Tom. That was really interesting. Does anyone have any questions for Tom?
Me again. I know the project. I've been in a chat like 2 months ago as they just started because I was looking at Uniswap v3 and then I did see that's very hard to manage as a private person. So but one thing is, but they, maybe you don't know it, but do they pool your liquidity or do they manage your own position?
I think they are not pooling it. I think they're just pooling transactions.
Okay.
So it's like, yeah, there's some, it's been like, it's an interesting protocol. And I was trying to dig into the specifics of that. And some things are not really immediately clear. It's really early on. Like you can provide liquidity to Uniswap pools, but it's still like there's not really a white paper. There's not really a lot of information out there. So certain aspects of like, sort of key management and that stuff, like it's not really clear to me yet.
Yeah, for me, the main question is, do you have a person who can like it's not about technology, but somebody has to make these strategies
Right.
for the farming. And I don't know, if you look at the team, it's quite technical. They need somebody who is like able to do this, like a market maker. Or that's just what I was thinking, because I think it's very difficult to make long-term, long-term profit from Uniswap V3, I guess. It depends on the market, but on a volatile market, I guess, or coin pair, it's like, I don't know, it's very risky. I guess, yeah, but I don't know.
Yeah. Yeah. Yeah, I think part of the deal too for me is like, thinking about holding this token long term. Like if it becomes like this is a really necessary piece of middleware for doing Uniswap LP, and there's like all this, volume going through it, the token itself could be very valuable. And also in terms of like long-term yield, I think it's like Uniswap. Well, I don't know. It seems like they're coming under some regulatory fire recently, but like it seems like a long-term, like that yield is not really going anywhere. If you figure out a good strategy on Uniswap specifically, it's like I think you're pretty much guaranteed to have a pretty decent amount of volume through there and from fees and etc.
Yes, yeah, I think technically it's also interesting that they like manage this from a Cosmos zone. It's that's a nice feature, but it sounds complicated. I know I have been there like 3 months ago in this chat, and then they just started. But you say it's live on Optimism.
Oh, Uniswap is.
Uniswap,
I was
Sommelier not.
No, they're not on an L2, but it's sort of like they almost are an L2 in some ways, because they do this like, batching and stuff. That's what I was saying, is I just sort of like I think Uniswap says that's like 90% reduction in fees on Optimism. And that's what the Sommelier people say too, is that it's a 90% reduction in fees. So I was just sort of comparing them along those lines.
Okay. Yeah, and the last 2 questions, I think this is to find out in the next calls, somehow this like warm-up round we did now, and I guess have further discussion about this. Yeah, sorry, going mute.
And I just want to add some comments to actually answer some of the questions Tom raised. And in terms of, our strategies, so for V1, we just want to focus on simple strategies to get the DAO pool member and the platform bootstrapped and proven the model works. And for V2, I'm definitely going to extend to more complex strategies. I think a key distinction AladdinDAO makes from all the other investment DAO in the market is, so we're not just a group of professional people to make investment for ourselves. So we take on a different vision. We actually want to service the people, the broader community. And to scale and to service the entire community. So, our strategy is to be the beta for the market, for the DeFi liquidity mining market. So we want to be the DeFi liquidity gateway and supply capital to the entire DeFi market. And that's why, we want to focus on long-term sustainable farms. Rather than just chasing the alpha for timing arbitrage, and I think scalability and low risk and to protect the broader general public average investors is very important part of our mission. Yeah, I know some of the alphas, it's great, high APY. But it's very hard to scale, and also it's not very timing friendly, right? And
yeah, I think my question was more around custody. Like, do we want to run like sort of vault strategies or are we just sort of like whitelisting, like, this is a protocol we've researched, we think it's great, you're welcome to put money here in this pool? Or are we going to say, like, there's a strategy behind this and we're doing, for instance, concentrated liquidity providing on Uniswap, but like the end user, the end Aladdin DAO member wouldn't be pulling the levers on that experience. It would be like the DAO making those decisions. So it's sort of more question around that. Yeah.
I think the key distinction is, we gather money from the users or not, right? So, so the DAO actually curate based on this game theoretical mechanism, right? And so we act as a human oracle, and so we give the smart contract, transaction orders. We want to, do X, Y, Z strategies. But important users actually, they self-allocate their capital, right? That's actually keep us away from the regulatory issues, right?
Cool.
Yeah. We just want to, make sure everybody involved, is safe, doesn't, get any trouble with the regulatory issues. And so, we collectively make decision, right? But that decision is made by the algorithm, right? It's not me, it's not you, Tom. It's it's powered by wisdom of crowd. It could be 30, 50, maybe 200 of us, right? But collectively we compete with each other under that algorithm, right? And so we come to the decision, what's the curated list. Right.
Cool. Yeah. Perfect. Well, yeah, so that wraps it up for me, but yeah, looking forward to the next presentation.
Thanks so much, Tom. Great job.